Hey traders, Nick here looking at Target. I got a question about it. First of all, let me preface it with number one, anything I say here is within the context of this too shall pass as far as the next 3 months going into the March deadline for the tariffs and whatever the Fed has and whatever else the sellers may be telling us. So having said that, also another point of view is that I don't like retail at all in general. I have a few favorites there. We made some money on Walmart when it was not up here. It was way below here, and I'll share that a little bit later, maybe. And I do like Costco, but even it is iffy. And the only really retailer that I would like is Amazon, but it's not really a retailer. And it is the reason why I don't like any of the other retailers. Like Macy's, for example, no way. Maybe for a trade intraday or something, but I don't think that the brick and mortar typical big box stores have figured out the riddle. Like Best Buy, for example. Amazon, they're still losing business to Amazon, and the fact that they're growing their online sales is only taking away from their own traffic, foot traffic. They're not taking back my business from Amazon. I haven't been in a Macy's in forever. And to buy anything or any other big box store. Maybe. Nope, I haven't. I decided to go to Best Buy because I had a credit there and I've had it for a couple of years. I may want to buy a Chromecast or something, I'm not sure. Maybe an upgrade Roku. But I have no reason to buy anything except online recently, just because I'm finding better deals, not because I don't like going into the store. Okay, having said that, there is an opportunity here with Target. Now, today, what is today? 123 during the day, or last night, I can't remember. Walmart got an upgrade. Where are we at? Right here. Walmart got an upgrade. Here, gutsy. I think it was Morgan Stanley. Pretty gutsy to make it here, because A, it's about 15% rip from the December crash, and at a place where, if I was long, this is where I would get out. So they have bigger plans. As you can see, we played, I think, Walmart off of this. We made a lot of money on it. It was a good call based on technicals, pure technicals. And which brings today. So Walmart is 50, 60 PE. I want to double check. It's expensive because it has, 50 PE, 59 PE. So let's call it 59. And today's call is on, the question came on Target, and I'm glad they asked about Target because it's the better deal. Target is probably 18, actually check that, it's probably 15 PE. Target, whoops. And these PEs are trailing, meaning it's actual 12 months, under 15. So more than 3 times cheaper to buy the Target. And what other reasons do I have Target? Target is not Macy's. They kind of figured out technology. They kind of have the blessing of Wall Street that they have their act together as far as management is concerned. So it's not like Macy's or it's like dying breed. At least it has some breath left in it. Moreover, I think more importantly is this technical upside potential. So I do like it a lot just from a technical basis. All right, let me see if I can draw it out. Where is it? Come on. There we go. Weird. Okay, so this is to mark it up. You've heard of head and shoulders, which is bearish. This is an inverse head and shoulders, which is bullish. If you see, we're setting a shoulder. We set a shoulder. The December crash set a head, and we just did another shoulder. The neckline depends where you draw it. I mean, maybe technician would even argue that it's down here. I don't care. To me, it's a neckline that's right here, plus or minus $1. And if indeed they're able to overcome the last couple of points of failure, then they could price in a rally, in theory, as big as this. So if you go up here, look what happens. You fill the gap. And that's why I drew these two. I don't remember when I drew them. I may have shared them already. But let me go down to a 240 minute. So 120, just to see if we can get more granular. All right, so this is the last failure, which is 72.7. These are 2 recent failures, and today we had a candle that was almost in breakout territory. So I would put that at 7150 plus invites people in. Why? Because that's where it failed today on Wednesday. God, I'm a day off all week. So 71.50 plus may bring in buyers to attack this level, which was $70 higher. So if the markets spike, and if the upgrade to Walmart is correct, this one will benefit more because they all move in the same direction unless they have specific reason not to, like a headline. And I don't remember reading anything about Target. We have higher lows knocking on a roof. If the roof breaks, they're going to overshoot higher. By how much? By as much as this. How much is that? 72.40-ish to, 62.40-ish to 71.40-ish. So the difference is about $9, and that's usually the upside potential that it has to fill. So therein lies my optimism on Target off of the Walmart upgrade. So again, to recast this whole thing, the assumptions that need to happen for this to happen, the markets is not going to fall apart. It may dip in the next couple of weeks, but it would be buying opportunity. We still have headlines. I don't like retail. I don't like chasing Walmart. I do like the gutsy upgrade from Morgan Stanley, the respectable name. So I want to play that upgrade with the Target. And it came as a question. It was perfect opportunity. So I will share in the write-up a table of ways I can do it, but the concept is easy. I can buy the stock and sit on it to see if that comes to fruition. So stops, where do I stop out? This was an area that it held. I think there is a point of control somewhere around 66 for the last couple of months of trading. What does that mean? It's like a balance area where both bulls and bears think that everything is okay in value, so they'll fight over it. Pivot zones, whatever you want to call them, it all means the same. So it should provide support on the way down. So I can buy the shares. What else I can do? I can buy the shares and sell calls, covered calls against them. And I addressed that in a video earlier. I'll try to share the trade setup for those. Or I could buy calls or call spreads, but for that I'll do it out in time so I don't get timed out of them. Or I can sell puts and put spreads. Doing both would be very long Target, and it all depends on personal preference and personal portfolio. So I'll share the whole table with as much information there, and I expect questions. Nick signing out. One thing I forgot to mention is that when I sell covered calls, I want to avoid the earnings, and I think they have an earnings report somewhere late February or early March, if I remember correctly. Double check that fact. So whatever I sell, I want it to be to expire before that. So there is a contract. The latest contract I would probably sell into is March 1st. And as far as levels, I think they price in $4 move in that contract. So I want to be at the top end of that move. So somewhere in the $73. How many can I sell? I can sell 100. One contract for every 100 shares I own. So it all depends on preference. Sometimes I would do a credit call spread if I don't want to sell a complete call. If I'm long calls out in time, I would sell shorter dated calls. I did that with the IBB recently. But those are tricks of the trade, and one can do them anyway. All right, Nick signing out for sure.